Hello, everyone, and welcome to this week's Nexus Mutual Community Call. We're happy to have you listen to us today as we continue to discuss the latest developments in the Nexus Mutual ecosystem. Our agenda for today includes a conversation on the state of DeFi in yields and risk, led by Brave New DeFi, an overview of the new listings in Nexus Mutual UI, as well as updates from Nexus Mutual Governance and the Foundation. We'll also have a special segment on product development and listing requests management today. And as always, we'll open the floor for any questions or comments in our open forum segment, where I'll also share details on how to claim your POAP for attending today. Let's kick things off with the state of DeFi. Brave, how is DeFi doing these days?
Hey everybody, good morning. I will provide an overview of the current market and the yield environment in DeFi before we get into some other updates today. In the last several weeks since I gave an update on the state of DeFi, we've seen ETH drop below 3,000. We've actually seen it drop near the $2,000 mark, but it's rebounded up to $2,600. Macro headwinds and fears about a potential recession have spread from TradFi markets into crypto markets, but with potential rate cuts coming from the U.S. Federal Reserve, we may see a potential rebound. But there is a lot riding on the outcome of the U.S. election in November as well. When I look at funding rates for ETH and BTC, I'm still seeing low to mid-digit positive rates, with some markets paying longs at the moment. I always use this as a metric when assessing bullish sentiment in the market. So we're back in a crab market for the time being until some other catalyst comes along to move the markets in one direction or the other. I'm currently working on a new issue of State of DeFi, the weekly newsletter. It's been on hiatus for the summer, but I'm working on bringing it back. As part of the writing process, I've analyzed lending rates across stablecoins and Aave, Compound V3, Fluid, Moonwell, Morpho Blue, and Spark Finance. Overall, the average APY across these stablecoin markets is 4.09%, which is roughly 2% lower than the current DAX savings rate. Appetite for leverage across DeFi isn't high at the moment. I'm assuming this is due to the big blowout several weeks ago that caused a significant amount of liquidations, and it's likely caused traders to be more cautious. But still, there are protocols where you can earn attractive yields on your stablecoins, ETH and ETH derivatives. We've just listed some Contango bundles, which I'll talk more about shortly. Contango, which creates simplified leverage yield strategies, has provided attractive yields on L2s. The best yields are in the range on Contango between 22 and 34%. That also involves using leverage, so definitely be careful if you're checking that out. I've also seen some great yields on decentralized exchanges for correlated pairs. Ramses, Velodrome, and Uniswap V3 offer some of the highest yields for correlated pairs, or when I say that, I mean like ETH and ETH derivatives or stablecoin pairs where permanent loss really isn't much of an issue. I'll have more detail in my State of DeFi newsletter, which should go out later today. But there are definitely still places to earn some pretty attractive yields in DeFi on chain. But that being said, while yields remain high, we're still seeing hacks across DeFi protocols and DeFi infrastructure. Earlier this month, Poly Network was hacked for $5 million due to a reentry attack. The Ronin Bridge was exploited for $12 million, and Delta Prime was exploited for $1 million due to a missing check in some of their protocol logic. If you're looking for a great read on the impact of hacks, Mitchell Amador just released an article on X called "The Real Impact of On-Chain Hacks," a comprehensive study of hack damage from 2021 to 2023. Mitchell is the founder of Immunify, so he has a lot of insight on this. This report reminds me of a report that I wrote back in 2021 when I first started getting involved with Nexus Mutual about the cost of hacks and lost funds. But according to Mitchell, if your protocol gets hacked, you should expect to lose approximately 16 million USD. See your token price decline by 52% of its market cap. Expect depressed token prices to persist for at least 6 months and likely a lot longer, and lose 3 months' time and effort recovering. While $16 million is the average, he points out if it's a sophisticated attack or it's a larger attack, it's likely to be 10 times higher or larger than that, than the average, according to Mitchell. It's a very great read, and it's incredibly informative. I highly recommend checking that out. I'm hoping to share something along these lines in the future as I start some of my research projects for the product and risk team within Nexus Mutual. And on that note, let's talk about some of the newest listings in the Nexus Mutual UI. In the last several weeks, we've added Contango protocol cover and several bundles for Contango. So we've added 3 bundles in the last week: Contango and Morpho Blue bundle protocol cover, Contango and Aave V3 bundle protocol cover, and Contango and Compound V3 bundle protocol cover. These are the most popular strategies in the Contango market, so you can find those in the Nexus Mutual UI. Those will also be added sometime this week to the OpenCover UI if you're used to buying cover through OpenCover. We've also added bundle protocol cover for the new EtherFi Liquid Vault, the eBTC Bitcoin LRT Vault. We've added 3 other protocol cover listings for Reserve Finance, Credit Guild, and Ramsey's Exchange as well. And for the EtherFi Liquid Vaults, you can actually buy cover directly in EtherFi's UI. They have point of sale integrations in their UI. So you can buy cover and don't even have to leave their UI to buy cover. They should be adding that eBTC LRT Vault on a protocol cover point of sale integration here in the next week or so. I haven't checked on that yet this week. We're also going to be adding some more listings this week, so keep an eye out for upcoming announcements. And as always, if you have a listing you'd like to see, just ask us to review a potential new listing. You can send me a DM on X, reach out to me in the Nexus Mutual Discord, or send us a message to the contact form on the Nexus Mutual website. We've also had some folks ask how we determine what protocols we list in the Nexus Mutual UI, so I wanted to share an overview of that process. Ultimately, Nexus Mutual is a risk marketplace where staking pool managers can choose to stake NXM against whatever listings they like. However, if we list a new protocol and no one stakes against it, or the cost of cover is too high, then it requires work to add the listing and no one ends up underwriting the protocol. Protocols with no capacity don't show up in the Nexus UI by default, so it doesn't help anyone to list a protocol that no one will stake against. As the head of the product and risk team, I conduct due diligence on any potential listings. We often get requests from protocol teams and from Nexus Mutual members to review certain protocols, but we're also always on the lookout for popular protocols and protocols on the rise as well. So when we do conduct a listing review, I always look at a protocol's audit history. Have they been audited? If so, was it by a reputable auditor? Did they actually address the findings in their audits? Sometimes you'll read through and they'll acknowledge certain vulnerabilities. They'll say that they acknowledge that they're there, but they're not going to address them because they don't think they're much of an issue. So you actually have to see, did they fix the findings in the audit? Did they address those things? So going through and reviewing the audit history is really important. If they haven't been audited, it's unlikely they're going to get listed on Nexus Mutual. I also read through their documentation to understand how the protocol works, understand the mechanics, and see if there's anything there that's likely to lead to a potential loss. I review the code base to determine the quality of the code and if there are any glaring issues there. And then take a look at the team. Are they known? What is their reputation and experience? A little due diligence on team members as well. As for some of the metrics we look for about 10 to 20 million in TVL as an indicator of demand for cover. That's kind of our baseline minimum. If we list a protocol, we want to be sure that they're growing and there is a sign that there will be demand for cover. And once I put together all of this information through the due diligence process, I discuss a potential listing with the rest of the product and risk team. If we do decide to list, then I put together the requirements for our engineering team, and then they get that on chain, and the front end team gets that in the UI. I also follow up with the relevant teams if I have their contact info and let them know that we'll be listing the protocol on Nexus Mutual. I'm trying to work with them on co-marketing, see if they're interested in a point of sale integration. But if we decide not to list, I usually reach out and let a team or a user know who requested a listing, just to let them know why we didn't list, what can be done in the future, if they, if they can improve anything, or kind of the baseline for why we decided not to list. But if we do list, once the listing is live, I let staking pool managers know so they can decide whether or not to stake against the listing. And from there, we announce new listings, do some co-marketing, and then we meet demand with supply as more users request capacity and buy cover. We actually have a feature right in the Nexus Mutual UI where you can request more capacity for a listing and let us know what price range you're looking for. If you want to buy cover, even if there is capacity and you'd like to see a lower price, you can request that right through the Nexus Mutual UI. So that's pretty much the overview of the listing process. Any questions on the listing process before I move on? If you do have a question, just feel free to raise your hand and I can bring you up on the space stage. Okay. If not, I will move on to some updates on the governance side. So I have a couple of updates here that I'll share. One is about a vote to replace a member of the advisory board. So in the last month, Lee McClellan, the longtime Nexus Mutual contributor, nominated himself to replace one of the mutual's existing advisory board members, Nick. So Lee's proposal went through the RFC and NMPIP process, and that proposal was put on chain for a vote to add Lee to the advisory board and remove Nick. That vote was put on chain on the previous Thursday. So that vote was open from Thursday to early Sunday, and members voted to approve this NMPIP with 691,997 NXM voting to approve. Quorum was met for this vote, so Lee has replaced Nick as an advisory board member. You can review the details of this proposal in the Nexus Mutual UI and on the governance forum. We'll be updating the documentation and other places where information about the advisory board is kept as well to reflect this change. We have another proposal that is on the governance forum. It is a DAO proposal, which is going to be going to a snapshot vote this week. This NMDP to establish Karpathy as the treasury manager for Nexus Mutual DAO. Karpathy has gone through the RFC and NMDP process where they've outlined a proposal to act as treasury manager for the Nexus Mutual DAO. In this proposal, they've outlined what they're proposing, which is to actively manage 6.5 million worth of assets. The breakdown of that would be ETH and ETH derivatives for $2 million, stablecoins for $1.5 million, and $3 million in WNXM and NXM. Karpathy proposes to gradually diversify out of WNXM and NXM to obtain the balances of ETH and ETH derivatives and stablecoins specified in your proposal. They're also going to keep WNXM and NXM. Not all of that 3 million is going to be diversified out of. So in total, it's basically requesting 6.5 million worth of NXM and WNXM, and then they'll diversify into basically $2 million of ETH and ETH derivatives and 1.5 million of stablecoins. They've also got some suggested some examples of strategies they might run, but ultimately that would be up to another governance vote. But Karpathy has outlined their fee in the proposal, which would be a 0.5% management fee that'll be charged in NXM or WNXM and paid on a monthly basis. And that fee would be 0.5% of the net asset value of the treasury. And then a 20% performance fee on the yield generated over the last month that'll also be included in their fee structure. So Karpathy has outlined managing the assets through a non-custodial safe, which uses the Zodiac Rolls modifier module. For more information on the proposal, you can head to the forum and check that out ahead of the vote. Once that vote is live, we will be announcing that across our social media channels, on the forum, and on Discord, so keep an eye out for those updates. Any question on these two governance updates before I move on? Okay. If not, I will hand things off to Hugh so he can give the foundation updates. Hugh?
Cool, thanks, Brave. Yeah, quite a few things going on. But obviously big news today in the markets, like with MakerDAO rebranding and stuff. So if you haven't seen what's going on there, check it out. I plan to get into the weeds a bit more after this. But yeah, so on to the foundation update. So quite a few different pieces going on at the moment. We've got the UI updates for staking and claims are coming along nicely. There's quite a lot to it, but they're looking really good. So that's progressing well, and hopefully we'll see those soonish. We're finalizing a new product for launch over the next week. We're working with OpenCover on this one, so it'll primarily be available via the OpenCover site. So yeah, keep an eye out for that. Hopefully, we're pretty excited about it, but we're gonna just do a soft launch to start with, and then push it out more widely after that. So yeah, keep an eye out for that one. You may have seen a whole bunch of announcements go out today on the NORS announcement, which is the Node Operator Risk Standard. So this is a staking nodes for ETH staking nodes. And we've been heavily involved in the development of this standard, along with people like KPMG, Coinbase, Pigment, Blockdaemon, Alluvial, and a whole bunch of other people. But we've helped kind of shape the standard there, and it's basically a risk standard saying that these are the practices that you should adhere to as kind of a minimum or a reasonable level of risk and operational to manage the risks, including operational risk and various other risks. So we've done a lot of work in terms of understanding the risks of staking and what is actually involved in all of that, especially to be able to price the product. So we were quite helpful in that, pulling it all together and driving it forward into a common standard. So that's a pretty big piece of work that's been going on in the background for a while. So yeah, good to see that live. And I guess in general, we're working with more partners on the distribution side of things. I guess in particular, one interesting thing over the past few weeks is we have a product with open cover that covers transactions. So it's called transaction cover. Basically, if you are about to sign a transaction, it gives you a warning if it's it's got like a screener on it, and if the screener says it's okay and then something bad happens, then basically the cover will the cover will pay out. So they've been working with another partner there distributing that, and they've kind of moved out of the trial phase, and so they've decided to double the volumes there. So it's still relatively small, but it's growing quite nicely, and I think it's a really cool product. So hopefully that one will continue to grow. I guess another big thing I've spent the last few weeks doing, we spent like 3 or 4 day workshop with one of our new distribution partners that we can't actually announce yet because they're still in stealth, but basically this is pretty exciting for the kind of distribution growth side, and we spent a lot of time going through the details of what they need from a product and protocol point of view, how they can build on Nexus, where they can use it, and how they can, I guess, package it up and market it to their distribution base as well. So that went through a lot of detail, and I think I'm really excited about this kind of partnership, and we'll hopefully be able to share more over the coming months. So that's quite exciting. I'm really quite excited about that one. So yeah, I think those are probably the main things, but lots of different pieces going on. Really excited to get new products out and see how they go. This transaction cover stuff is really exciting, and hopefully this new product, which we'll announce next week, hopefully, will attract some good volumes as well. So yeah, lots of different things going on, but happy to take questions on anything.
If there are no questions to Hugh at the moment, I'd like to continue with a review of the last 2 weeks in cover sales and fees earned. In the last week, the third week of August, the mutual sold $12 million worth of cover, and members earned more than $73,000 in fees. We've seen a large cover buy for Aave V3, and in the previous week, the cover sales and members earned figures looked quite similar, and we had seen a surge in bundled protocol cover buys. This week, total active cover stands at $81.8 million. We are now at once again over $80 million worth of total active cover. And last week, total active cover stood at $73.7 million, with the also impacted from the market dynamics and the downturn. Now I'd like to open the floor for any questions or comments. If you have something that you'd like to discuss, please feel free to raise your hand or type your question in the thread. If not, you know where to find us. Reach us on the Nexus Mutual Discord anytime with any questions or concerns. As a thank you for joining us today, we're offering a POAP to commemorate your attendance. If you'd like to claim your POAP, please open a ticket on Nexus Mutual Discord or reach out to me directly, and I will provide you with a mint link. Thank you all for taking the time to join today's call. Stay safe out there in DeFi, and we look forward to seeing you in our next call on September 10th. Have a great week, everyone. Bye.
Thanks, everyone.